Yes, thank you everyone, and good afternoon. I think you had a long day, so just a few more sessions to go. Kelvin here, very good to speak to you. So I think, thank you for the introduction. No need to self-introduce myself again. And before I start my 15-minute presentation, maybe just a quick survey. Year to date, for the people here, how many has lost money in your investments? Let's have a show of hands. Come, don't be shy. All right, I would see that it's easily 70% or more, including myself. Right. Now, why do I say myself? The reason is because it's really related to the ETF that I'm talking about, which is the one here. Is it showing on the screen? Yep. There's a bit of a lag every time I press the button. So this is the ETF that Nikko Asset Management we launched on 20th of January this year. It basically is an ETF that tracks the China electric vehicles and future mobility ETF. So this ETF gives you exposure to a tech sector, mainly electric vehicles. It's down about 30%. Down about 30%. We launched it at $1 Sing in terms of the trading price. Today it's just about 60 plus cents. Now, I think what I want to share with you today is really to help you understand, right, why the price is down, for you to think about it, and for you to gauge the opportunity, whether or not, where you can kind of find the bottom and where this ETF makes sense again. There are three key reasons, in my view, why the ETF has sold down about 30%, and I'll run you through that. The first is really quantitative tightening, which initiated by the US Fed. The second is essentially second-order effects coming out from the Ukraine-Russia crisis. I think you've heard more than enough of that. I'll touch a little bit about that later on. And the third is really the lockdown in China, right? Three key reasons. So I tried to give, put it into a graphical representation. So like I said, there's always a lag in terms of, So this is a graphical representation of the year-to-date returns of all the 50 companies, which is within the index that the ETF tracks, right? So on the left side are the biggest companies by index weight. All the way to the right side, those are the small companies. Now this is taken in year-to-date as of end February, essentially the first 2 months of this year. So what happened then is that you can see in the first 2 months of this year, things are looking quite okay. Things were looking quite okay. And as we kind of entered into the new year, what the market was really worried about was the interest rate hike by the Fed. They kind of, they officially communicated that into the marketplace sometime in late December 2021, right? The market was already aware of it. I think everybody has heard about this for like more than a year. And it is priced in as of February this year. And you can see the weakness is really concentrated here in the large caps, right? Large caps. Large caps were selling off in my ETF. And of course, there were pockets of some companies here that that saw negative returns as well, but it was okay. So what happened after that? Now, this chart here shows year-to-date returns of the same 50 companies in the exact same order by April, right? That was 2 months after Russia decided to conduct its special operations in Ukraine, and everything went negative. Now, the reason why I wanted to show this is because there is a difference between what the market is trying to price in based on the returns that you see. This chart, the difference between this chart and the chart that you saw earlier on is essentially the market trying to price in macro factors, and they're worried about what is happening in the Ukraine crisis. And it is market-wide. It is a systematic sell-off. Everything else in the market was selling off. If you look at global equities over the same period, it was down about 20%. If you look at the broader market, China equities, it was also down about 20%. So everything was selling off. I think we need to be very cognizant of this fact. So if we come to China itself, the third reason why there's a sell-off in the China electric vehicle and future mobility sector is COVID. And of course, we all know there is a COVID lockdown. So since March, cases started to ramp up again. And of course, there's a lockdown. But what's important here is that the lockdown does have a positive impact. You can see here, the number of cases are starting to come down ever since the Beijing government started to clamp down on everything. So things are improving. But the catch here, the irony here is that the Chinese regulators need to lock down the country in order to control the spreads. And the reason is very simple. Why do they need to have a zero COVID policy? It's because their guys are not vaccinated. Vaccination rates in China is very low. And it is very difficult to vaccinate. No matter 1 billion people, it's just very, very difficult, and it's very costly and very difficult to administer. So China will continue to have this problem going forward until they kind of resolve what they want to do with their zero COVID policy. It will continue. But it will continue in a very interesting way. It will continue in waves. There was actually a mini wave in January 2020. Most of you didn't really realize that. The Chinese regulators were very quick to clamp down. And actually, because of that, the Chinese economy post-COVID was among the first countries in Asia to actually recover. It was very effective then. But of course now, now the market is starting to worry that it's not so effective anymore. But that said, now that they are kind of controlling the situation, it will get better. But once they open up the economy again, there will always be that risk where cases will start spiking again. And with that risk, China equities might come down again. So I just want to put everything in perspective. So of course, how does it relate to the China EVFM sector? I think the impact is quite well reported in mainstream media. So you can read about it. In terms of number of EV car sales, April is a watershed. It'll be bad. Numbers are down about, numbers in terms of car deliveries, EV car deliveries will be down about 50% sequentially. And year on year, it will slow down. And you can kind of expect that in May, things might be similar. So there will be a period of weakness. But that said, we do think that the sector will start to, specific to the COVID situation, things are priced in. And this situation is probably a little bit transitionary. Okay, so coming back to a little bit of a positive note, right? Despite all the three main reasons why the market is selling off, investors are worried, down 20-30%. Why do we still think today that the China electric vehicle and the future mobility sector is promising? And there are really just four very simple reasons. The first is government intervention and policy support. I don't have to repeat too much about this, but essentially we all know that whatever the Chinese government wants to do, they try their best, right? Their track record has been pretty good, but they try their best to make it happen, so execution. Number two is demand, right? So the Chinese market is China car market is very large, about 300 million cars, as large as the US market, if you're not aware, right? And they are going to essentially be selling EVs into this existing marketplace. And I'll come to the details later on. Number three is supply. China, being China, has vast and deep manufacturing capabilities. It has the manufacturing base to grow an industry. And number four, really, although the name is China EV and future mobility, it's not just a car. When investors invest in this sector, they are investing in a long-term theme, and that long-term theme is future mobility. And what is future mobility? For the index that the ETF tracks, it is essentially exposure into four themes, right? The four themes are listed here. First one is batteries. Second one is smart mobility, sharing economy, high-speed transport, which is quite unique to China. And then the fifth one is vehicle automation. With each trend, it splits into individual value chains, right? And you can kind of see all the chains there. I won't go into the details. But the key thing here that I want to mention is that in designing the ETF, we wanted to capture investment opportunities, as you see here in the slide, over time. And I use the word over time. It takes time for this sector to play out. Using Singapore as an example, we want to sell EVs into the market. Even the LTA, our own regulators have a 5 to 10 year view. It takes time, but it will grow. So if I kind of move on to the next slide here, again on China, I just want to kind of mention that China is already a leader in the EV market. You can see here that over the past 5-6 years, number of EV cars in China, in terms of number of unit sales, have been growing exponentially, and they have always been leading other major economies, right? As of today, China accounts for 1 in every 2 EV cars that are being sold globally, right? And they basically they're also the largest battery manufacturer, EV battery manufacturer globally, accounting for about 70% of global EV battery market share. So they're very big. coupled with the fact that they have government support, two very important policies that came out in 2020, the year 2020, two policies, which I feel is very important. The first is the 14th five-year plan. It states that EV cars, will be a strategic emerging industry in China for the next 10 years. That's the first thing. The second thing is the State Council Blueprint, which was also issued in 2020, which states that they want to make sure that EV car sales accounts for about 25% of all passenger car sales in China by 2025. So that's about in 3 years' time. In fact, they are already kind of going over that. They're already achieving that limit. And I would also say that China is interesting because their leadership in this space is something that other major economies really want as well. Be it the US, UK, or even Europe, everyone is trying to set up policies in order to grow this industry. This is a strategic industry. It will add jobs, it will add technology, and it will grow industries. So very important. And I'll just say the last thing is that the penetration rate of EVs within the car market today, globally, is very low. It's about 5 to 10%, which means that it has a very long runway to grow. And that's quite important for any new technology to kind of permeate through the marketplace. So kind of looking beyond the immediate, depressing market, sentiment or whatsoever, we have actually seen very good growth in terms of momentum, in terms of EV sales in China when we kind of look back. On this chart here, you would see the number of actual EV car unit sales, kind of going back all the way to 2016. So I won't go into the details. I will explain. The blue color are just battery EV cars, and the yellow color are just plug-in hybrids. So total number of unit sales. What's interesting here is that since the start of 2020, the growth rates have gone exponential. In case you can't read this chart very well, the green line shows year-on-year growth. As of the first quarter this year, it was growing at about 100% a year, over 100% a year. Now, the significance of this, barring the immediate market pressures, is that when they issue the directive and when they issue the policy, there is market adoption and there is market acceptance. People do buy. Okay, so it's a market that EV cars can grow in. Now, one good thing resulting from a depressed market as well is that as prices come down, your valuations also get cheaper. It's a very, very simple concept. Even if you go to an institutional seminar, the analysts will say the same thing. Valuations are very important when it comes to investing in equities, and valuations are coming down for the China EVFM sector. Looking at this specific index that the ETF tracks, the forward price earning ratio, 1 year forward from now around there, is about 35 times. If you kind of look 2 years out, it's going to be about 25 times, which is not demanding, right? Coupled with the fact that the average sell-side analyst is forecasting about 50% year-on-year earnings growth every year for the next 2 years, there is good earnings support to kind of hold up these valuations. Now, if you're thinking whether or not valuations will come down even more, and there is always that possibility, is that one thing for sure, personally speaking, is not going to go back to 2018 levels of 15 or 20 times. Unlikely. The reason is because you're in a different regime. Back then, there was no policy directive. Today, there is. But what do I mean by today? Today means start of 2020, right? When the direction is being set. So as long as the policy is firm, policy is clear, I think at a very loosely speaking, valuations should find some support at some point. So kind of going down to the last slide that I have, I just want to kind of make a point that although I think through the day, you might have heard a lot about how the various analysts sharing some stock ideas and everything, I want to mention that when you invest in an ETF, being an ETF business development person, when you invest in an ETF, you are really trying to gain exposure to a basket of companies. It's really not about taking a take on a specific company, although that also works. And it's important to understand that by investing across a basket of companies, every company will be different, trying to play its role within the sector. Specific to the EVFM ETF that we have, there are 50 companies in there, each one doing something different. But the point here is when you invest in it, you're trying to gain exposure into the activity throughout the whole sector. So I'll just use some examples just to show you how different the companies can be. 3 companies out of the 50 here. One is Ganfeng Lithium. They are one of the largest lithium mining companies in the world. Leadership position in China, has got good prospects for structural growth, right? So they are essentially a commodity producer. Second one, Yunnan Energy. Yunnan Energy is an EV battery component manufacturer. I think they are pretty good at making separators. Separators is essentially the material between the anode and the cathode of a battery. It allows the electrons to pass through. So that's important, right? And they have aggressive plans, planning to capture about 50% of the global market by 2025. And now you have the third company, maybe called Eve, also a very aggressive company, but aggressive in terms of expanding the capacity, because they manufacture EV batteries as well as ESS, energy storage systems, essentially commercial type EV batteries. So, and different types, and you have other companies in the ETF as well. For example, companies that do telemetrics. Electric vehicles are essentially electrified vehicles. And there is a need for all the different components and devices to talk to each other. So telemetry is also a growing field. So many different types of companies. When you buy an ETF, you gain exposure to the overall sector growth over time. So I think with this, I just want to kind of, hopefully you have good takeaways. You get a sense of the development in the China EVFM market today. Hopefully that gives you comfort, despite that 20-30% sell-off in the price. It happens everywhere right now. And hopefully, last takeaway from me is probably a reminder that yes, China EVFM is down year to date, but it is not out. Thank you very much.